Hey guys,
We're back.
we're back. Welcome to season 2, episode 1 of Asked and Answered. Asked and Answered, the advice show where me, Chelsea Fagan, founder and CEO of The Financial Diet, author of romance novels, owner of Dog, sits down with Erin Lowry, financial guru,
Oh, God. I like translator.
thought leader, thought fluencer.
No. Finfluencer.
Financial translator, owner of Dog.
Also
What's
owner of
another
Dog.
superlative?
Author of 4 books.
Author of 4 books.
Not romance.
Not romance.
Just personal finance.
Just yet. Although she was a consultant on my new romance novel because the Buffalo Bills feature in it, and I needed to have a sensitivity reader to tell me whether or not my Buffalo Bills representation was authentic.
And it was a Buffalo Bills charm. Not really. It was a buffalo charm I was wearing in the last episode. Somebody asked. That's what it was.
Wow.
It was a buffalo, not a pig.
Listen, go Bills. My husband, who's a big Formula One fan, he's a fan of the Ferrari team, and their motto as a team is next year.
That's also the Buffalo
That's
Bills
also
motto.
the Buffalo Bills motto. That's what I said to him the other day. But I believe it. I don't know. Something's in the air this year.
Yeah, I mean, other people say that every year. I'll believe it when I see it, you know?
You got to have the faith. You got to keep the faith. That's what the Buffalo Bills run on. But anyway, we are back for another season of Asked and Answered by your request because you guys loved the last season and we really loved doing it. It doesn't feel like work, and yet it is. And yet it is.
You know, if you do what you love, you still work the
Every
days
day
of your life.
But so we are here. You guys asked us a lot of questions. Unsurprisingly, many of them are kind of about current events, which, I mean, we're recording this. This will run in like 2 weeks, maybe a week and a half from when we recorded the first episode. So who knows what's going to happen between then and now, because...
We should probably timestamp this. It is mid-April of 2025.
Correct. But as we know, as of right now, current events means hour to hour, basically.
Yes.
But today's first episode is going to be all about recessions and tariffs. So if you are feeling anxious or curious about either of those subjects, strap in because we're gonna get talking. But before we do, I want to give a quick shout out to the sponsor of this and every episode of Asked and Answered, our good friends over at advisor.com. So advisor.com, if you're not familiar, is a financial advisory service, wealth advisory. They work on a flat fee model, which we really support because it's more financially accessible, but it also means that they work for you and not commissions, very transparent. I personally have been working with a financial advisor for years, and not only, by the way, have I reached out to my financial advisor, shout out Nick, multiple times since the election to be like, what the hell is going on? What should I do? On certain days, he's actually called us and been like, hey guys, I don't know if you've seen the news, but don't look. Let me explain it to you first. So a good relationship with a good financial advisor is genuinely quite helpful, especially in times of economic uncertainty. It's also very good for helping you make really good decisions. For us, for example, during the very chaotic tariff stock market impacts that we'll discuss, we ended up doing some reallocation in our portfolio that ended up benefiting us. So all of that is to say, really endorse working with a financial advisor, and we really support the team over at advisor.com. They're great people. We've worked with them for years. And if you want to learn more about working with a financial advisor, just hit the link in our description, set up a free call. It's totally free, risk-free, but reward heavy. Advisor.com. The one, the only. All right, asked and answered.
Let's go.
So, as I mentioned, we are talking about recession and tariffs. And since I just discussed the tariffs and their impact on the stock market, let's start with that. I may be underestimating the magnitude of these tariffs, but exactly how much of my life will be impacted by these moving forward, I am very scared.
I don't want to say you should be, but all of our lives are about to be pretty significantly impacted because the cost of goods are going to go up pretty significantly. And so the bigger question, I think, first of all, do you have stable income? Are you confident in your industry? Will your specific industry be impacted? Those are things that obviously we can't answer for you. But just knowing that the cost of goods is going to go up, I'm not suggesting people panic buy. I do think that that is something that we should talk about a little bit. There has been a little bit of panic buying behavior because if there's a certain good that you know is going to get hit with a really high tariff, should you be stockpiling that good for right now? Me personally had that moment around diapers recently. Where I'm like, oh, I think our brand of diapers might be manufactured in China. So how expensive are those going to be? Yeah, I'm going to let you come in on this and then we can keep talking.
Yeah. I think there's two things at play, right? One is the financial impact of actual tariffs that get implemented. And the other is the psychological impact of this constant nonsense economic chaos that is not only really difficult for basically all sectors of the economy because, businesses can't plan or invest when they don't know what things are, what the situation is going to be. The stock market obviously is, in total chaos mode because every day futures look very different based on what the outcome could be. It's also very alienating to our closest allies. It just seems on every level to be, let's just say poorly thought out at best, possible market manipulation at worst, or even economic sabotage at worst. Now, I will say, I do videos on a sort of ad hoc basis when I'm feeling the darkness and want to sit down with you guys for one of my iPhone wrap sessions. And one thing that I have seen people comment on those videos, particularly about the one I did recently about tariffs, is I think there's a tendency to, over ascribe nefarious and sort of Machiavellian intent to these tariff gambits. I don't want to underestimate the Trump agenda or administration, but I also don't want to overly ascribe a level of cunning or a level of sort of nefarious strategy to it where I don't think it exists necessarily. And I say that for two reasons. One, it is important to remember that not only the Trump administration, but the whole cabinet and certainly Congress, even on the right, is pretty ideologically diverse as it pertains to protectionism. There are people within the inner circle who are, I would say, completely delusional and think that we're going to go back to some sort of, not even just pre-World War II, but like pre-turn of the century, like we're producing everything in our local communities. And I mean, a level of reversed course on the global economy that I don't think is even possible from a production standpoint.
No, it's not.
But also economically completely unfeasible and would do massive damage to the American economy, particularly on the lower end of it. But there are people in his inner circle and in amongst Republicans generally, who are economically protectionist at that level and would genuinely like to impose completely onerous tariffs on essentially the entire world. It's also important to understand that still probably the majority of Republicans are quite neoliberal economically. They're quite almost not libertarian, but they're quite aggressively for the freest market possible. And in fact, it used to be very much the left who was pro-tariff, pro-economic protectionism, pro-reshoring jobs. And it was very much Republicans who were like, ship this stuff off to, get it from Cambodia, get it from Vietnam, and their gambit, if you really want to dive deep, is let's use foreign policy to destabilize parts of the world and have, essentially non-governmental organizations use soft power to get really beneficial economic setups in these parts of the world and then extract incredibly cheap resources and labor from them. I mean, even if you look at what's happened in Ukraine, for example, a lot of our helping or not helping Ukraine, a lot of that is being directly leveraged against access to resources. So I want to be clear that the view on to what extent America should be protecting itself economically in this way is very diverse. Again, even amongst the right, even amongst the administration itself. So this is a battle that they are also waging internally as a party. And this is a battle that I think ultimately the arbiter of where this is likely to go is still long-term probably going to be the S&P 500 because that's where the majority of wealth is held. And it's by primarily the wealthy and the very influential in this country. And also the Fortune 500 businesses that are not going to be able to effectively do business if they can no longer access the cheap goods and labor that they rely on. Very long-winded, I know. All of that is to say, yes, tariffs, when implemented, will have an impact. Do I think that this is some sort of nefarious gambit to intentionally crash the economy, to install a dictatorship? No, because I think that there are more effective ways to do that will not simultaneously alienate and impoverish basically every wealthy person in America and most of Republican donors and most of Republican politicians. So I think we need to step back and say, we don't necessarily know how this is going to shake out, and we can make contingency plans based on what actually gets implemented. But this is the most important time to separate signal from noise and not be too overly bogged down in the day-to-day hashing it out. That was long.
I also would say on that, is this some sort of super nefarious plot? I think it's also a little bit of what happens when you just put somebody in position of power because, quote unquote, they're good at business, when maybe historically they haven't been, quote unquote, good at business. And they think that they're, making this great business play. This isn't a business.
Yes.
And if you also... Listen, I'm not for lifelong entrenched politicians, but at least most of them seem to have a different understanding of how global politics work. And if you don't have that and all of a sudden you're put into an extreme position of power,
yes,
we might be seeing kind of the fallout of that, as opposed to, yes, this idea of it's, some sort of long-term plot.
Right now, the battle that is being waged globally, and not just in America, is governments versus corporations, right? Because we're at a place now economically and financially where a few corporations, and a growing number of them, have more power, resources, influence, and leverage than most states, most countries. There's a really interesting New York Times article on the specific battle between the Trump administration and Apple that I think is really worth reading to give you an idea of how each side of this gambit is, or each side of this sort of war is really perceiving it. Because ultimately, I think the longer term battle, and we're also seeing this obviously now, the Trump administration is going after Meta with antitrust laws. And there is really an effort. And I will also say ideologically, there are certain members of the right in America that are pro diminishing corporate power in a way that I think could be an opportunity for some cross-party collaboration, and does have some that I do think would have some benefit for a lot of long-term American labor and industry goals on the left. For example, the fact that Lena Khan was ousted from the FTC, pretty surprising, given that there are a lot of people on the right who really do support her going after big tech and, really trying to strengthen some of these antitrust regulations. But again, that is another battle that is deeply entrenched within the American right, because you do have and the global right? Because you do have a segment of the right that is increasingly economically protectionist and economically populist, more so in Europe than in America, but you do have it. And then you have the old guard, which I would say is as ruthlessly capitalist as possible, as corporatist as possible, and all about entrenching corporate power and, and wealth accumulation. And so I really think when you look at where these tariffs are going and what the long-term plan is, it's almost more relevant to look at how these battles are playing out between the corporations and the governments, because it gives you a very day-to-day microcosm of where exactly these battles are being fought and what is being asked of these companies. And Apple represents a sizable percentage of the S&P 500. Like, if you are invested, if you have a 401k, a big part of your portfolio, not the majority, obviously, but a nominal part of it is entirely based on the profitability of Apple. And that is also where this is coming into conflict, right? Over 6% of the S&P 500 is Apple alone. Microsoft's also over 6%, our producer is telling us. But so it's important to understand that it's not just how much money is Apple making, it's how much is Apple profiting, which is a big question because their margins are so good because everything is made in China. If they had to make their products in America, not only would they be much more expensive, they would have much lower profit margins. So that would have a drastic impact on the value of the equities that we hold in our portfolios. So these are very economically complex and intertwined issues with very conflicting interests and very conflicting ideologies. And I don't think it's as simple as just saying we're out to destroy the economy to install a dictator. Again, many easier, lower lift ways to do that. And trust me that it's already very much underway. Look at how insanely half of this country, if not more so, has been gerrymandered over the past 20 years. You think that's not a way to entrench right-wing power? Eroding education, a great way to do it. And we're doing that as aggressively as we can. Like, there are many ways to do that. I think the tariffs issue and economic protectionism more broadly is a much more complex issue. And again, we have to separate how stressed out the news makes us from what actually impacts our wallets.
So a couple of follow-ups on that. First, just in the example of corporations versus government, I think it's very telling that with the, 145% tariffs against China, oh wait, never mind, phones, laptops, chips, those are exempt. So things that we desperately, desperately need, and certain corporations would be livid if there was that kind of tariff, and it would be, incredibly expensive, and then also hurt the stock market even more. We're throwing around a lot of terminology. So a couple of things too. It's not bad, but on the translator point, I do think it's also important. We do not have enough time to get into all of the minutia of what everything means. But I do think it's also important, like the S&P 500, referencing that. What that is an index. An index is just a statistically significant portion of the stock market that we use to say, hey, this is doing this, so we're going to extrapolate and say the whole stock market is behaving this way. So S&P 500 is 500 of the biggest companies. So also like Apple representing 6% of that. It's because it's a huge American company. So just thinking that like if the S&P 500 or if you hear Dow Jones Industrial Average, like those are an index that represents statistically significant companies of the stock market. Also, the tariff stuff, I mean, who knew that we were all going to have a minor in economics in order to understand anything that is happening to our wallets? So if you're interested in learning more about the tariffs, I promise this is not super stressful, and they do a fabulous job of making it actually informative and without using a ton of jargon. Planet Money, the podcast, has a lot of really great episodes about what exactly tariffs are, how they're impacting us, what does a trade deficit mean? Is it really that bad? The specifics kind of what's going on with Canada. Also, we're so sorry, Canadian viewers. We don't have any responsibility for this personally, but I'm sorry. Just a great option of something to check out if you want to be more informed about what's happening and get that minor in economics that we apparently all need to have. Honestly, maybe a major by the time this airs.
No joke. Agree with all of that. Okay, how do we actually know if we're in a recession, and does it actually matter?
Have you seen the compilation of news organizations saying the R word? Because they don't want to say recession. Like they actually say the R word. That's what it's feeling like in terms of like the tension around saying the word recession.
Yes.
And okay, it's a bit complicated. Basically, we will be told after the fact when we're in a recession is kind of the best way to explain that. It has to do with certain benchmarks, how our economy is performing, which also ties into consumerism and if we're buying products and if we're not buying products. So tariffs can impact that as well. Every recession feels different. And also keep in mind that what the stock market is doing isn't necessarily indicating whether or not we are in a recession. Again, they might look back on a lot of what's happening right now in like 6-7 months and say like, oh, this is when a recession started. And we might not know that we're in it yet. Or they might say, hey, we just had like a huge market correction and we never actually went into a recession. In terms of what it means for us, I think millennials specifically are a bit scarred because so many of us came up in the Great Recession. And so that word is just a very loaded term for us. What does that mean for us? What does that mean for our futures? We associate that with unemployment that was actually statistically, by looking back at other eras of unemployment, not as bad as it's been before, but still pretty bad. It felt incredibly difficult to get a job. I graduated in 2011. Technically, the Great Recession had been over for 2 years. No one told the job market. The reason this is so complicated to answer is because while all of these things are intertwined, you could be not in a recession and still be feeling it in the job market. Unemployment numbers could go up, cost of goods could go up, but we still might not be in a recession. But you day to day are feeling the pinch of something. Or we could be in a recession and you could still have job stability. The cost of your personal life might not actually change all of that much. So it's kind of, I don't want to say it's a fear-mongering word. It is an important word for a certain term and economic climate that we can end up in. But I feel like it's just this loaded term that people kind of bat around to mean any sort of time of economic uncertainty or instability.
Time for me to hate on Democrats. So one of the reasons that Biden and by extension Kamala Harris lost in 2024 was because although they were constantly touting wonderful economic indicators, pointing to a lot of charts, highlighting a lot of X and Y axes, And we were being told by, the Ezra Kleins of the world and the, whoever else is of the world that things had never been better. That's not how people were feeling. That's not how people were feeling. Cost of living was becoming unattainable. The job market was terrible for people entering into it, especially I think one of the most significant reasons that Gen Z swung as hard as it did to the right was because their entire quasi-adult lives were, in many ways kind of disrupted, if not stolen, by COVID. And they entered into a job market that was, let's just say, weak at best after, being in isolation for years during college and all of these things. And they felt that, I think less that the left, quote unquote, wasn't working for them, but that whoever's currently in power wasn't working for them. And when you combine it with the post-pandemic inflation and just the hard swing away from existing administrations that you saw globally, to me, it makes perfect sense economically that people were willing to hit the reset button. And I do think that, at every level, the way that was handled was terrible. He should have dropped out way sooner. We shouldn't have marketed Kamala Harris so strongly as being just a continuation of the Biden administration. That seems like a huge mistake in retrospect. He was deeply unpopular leaving office. But I say all of that to say, you could point to many economic indicators during, especially the second half of the Biden administration, and say things are great, right? You could point to the stock market. You could point to job growth in certain sectors. You could point to the unemployment rate. You could point to all kinds of things. But again, I think not only does that not, if that doesn't apply to you, which it didn't apply to many people, that does nothing to help you. It also, I think, infuriates you. And as you say all the time, the stock market is not the economy. And, I think it's just important to understand that whether or not we are, quote unquote, technically in a recession will not necessarily make your financial life any better or worse individually. It completely depends on how you were doing before. It depends on what sector you're in. It depends on, like, for example, all those federal workers that got laid off, they're in a personal recession, let me tell you. You know what I mean? Like, if you're in an industry that imports most of your products from China that is not one of the exempt categories, you're in a recession. Congratulations. Like, do you know what I'm saying? Like, I think we have to understand that although macroeconomic terms can be helpful, and speaking of tariffs, if you go back and look at the Great Depression, the Smoot-Hawley Tariff Act was implemented in a direct attempt to, reappropriate a lot of production and agriculture and things like that to America. And I think it's something like 8 out of 10 economists now agree that it actually worsened the Great Depression and kept us in a depression longer. But all of that is to say, even during the Great Depression, there were people who were thriving and people on breadlines, Even during the Great Depression, there were, people who were feeling the impacts much more than others. And it's also worth noting that anytime there is an economic dip like that, in the stock market in particular, the people who have money, if they weather it out, will end up enriching themselves as a result of that, which is why some people are saying we need to investigate the Trump administration for market manipulation when it comes to, these tariffs. So all of that is to say, I think it's important that we all give ourselves permission to kind of not care as to whether or not we're technically in a recession and focus on our own personal finances.
And when you say weather it out, you mean left their money invested in the stock market.
And kept their jobs.
Yeah. Well, yeah. So the reason that's important too is, let's talk Great Depression specifically. There's kind of two conflicting opinions about when that ended. Some people will say it took as much as 25 years for the stock market and for people to recover. So we're talking post-World War II, which also meant like a boon in the United States. But other people will point to, actually, if you left your money in, by around 1936, things had bounced back. The problem with this idea of how long it took to recover is because when you pull your money out of the market, which I think we'll get into a little bit more of this kind of stuff later, but if there's an economic downturn and you panic and you sell your investments, you're having to make a bunch of different decisions, trying to figure out timing, when to sell, what to do with your money in the meantime, and then when to get back in. And historically, people who have weathered the storm and left their money invested because they could, that's the other important part here, because they had income coming in, they didn't actually need that money in order to live, is what I mean by that. They tend to break even within about 5 years, give or take, of when the big dip happened, which for people who got out let's look at the Great Recession specifically. If you sold your investments in 2008 and maybe didn't get back in until 2010, 2011, you missed the start of one of the longest bull runs in stock market history. And by that, I mean one of the best, it's going up, 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 up runs in stock market history. So that is also how a lot of people are able to build their wealth, is they're able to just kind of sustain. And that's also the importance of making sure not all of your money is in the market and you have some cash on hand for times like this.
Asked and answered. What else can we say?
But who cares if we're in a recession?
Well, actually, all right. We'll end on this. Someone says, should I buy the dip? Question mark, question mark. Should I buy the dip? 3 question marks. Should I buy the dip? 5 question marks and exclamation points. Let's say what buying the dip is.
Oh yeah, so let's translate this one. So buying the dip means you are putting money into the stock market, aka buying stocks, index funds, what have you, mutual funds, when the stock market is down. So it is on sale. You're going to hear that term a lot too. There's a fire sale on stocks, because when the market goes down, that means that the cost of stocks is a little bit cheaper. So yay. And also we're using stocks as sort of a catch-all term right now. This could mean you're buying into an index fund, a mutual fund, an ETF, individual stocks, but please don't do that unless it's like a tiny bit for funsies. So when people say buy the dip, it's dipping down. Think about it like a curve. It's dipping down. Should I put a lot of money in? Okay, so here are the people who should quote unquote buy the dip. If you are somebody who has a financially stable job, you feel confident that your salary is consistent, your job is safe, you're going to keep earning your paycheck, and you have a 401k or a 403b or an IRA or a SEP IRA or a solo 401k, any of these type of retirement vehicles that you contribute to every month. Heck yeah, buy that dip by continuing to contribute to your retirement plan. This is why we think about terms like dollar cost averaging. It's an investment theory that sometimes the stock market's more expensive, sometimes it's a little bit cheaper, but it kind of averages out over, the many months, the many years that you are investing. Lump sum investment is just when you wait and put all the money in at one time. So there are people who might be like, hey, I have this money that I'm amassing that I've been wanting to invest, so now I'm going to dump it in because the stock market is low. The idea of trying to time the market, even if you are a professional, is a little bit of a fool's errand if we're being honest. So what's best is to just be consistent about the amount that you are contributing and the frequency with which you're contributing. So keep putting money into your 401k, your 403b, whatever retirement vehicle that you have. Now, should you stop because the market is dipping and you're panicking? The only people to whom I say stop is if you are incredibly concerned about the security of your job and the amount that you are contributing to your 401k or your 403b or whatever is a significant enough portion that if you withheld that money, let's say it's $300 a month, and you're like, that's my student loan payment. That's a big payment. So if all of a sudden I lose my job next month because, I don't know, I'm a federal employee and I'm really stressed about job loss, and putting $300 into a savings fund is actually going to make a big difference in my life right now, then maybe you do need to press pause. And I hate to say that because I hate to ever tell somebody to stop contributing to retirement. But if you really need to be shoring up cash reserves right now, then please do it. And then as soon as you feel financially stable, make sure that you go back to your automatic retirement plan contributions. So that is the big thing about buying the dip. If you're somebody who's just like, yeah, I've got an extra $5,000 laying around and I want to buy the dip, if you're really confident you don't need that money because, hey, I've got so many tens of thousands of dollars socked away in cash and, I feel like stocks are on sale right now, I really want to get in. I mean, okay, sure. Just make sure that you don't need that $5,000 for the next, 5 to 10 years.
And as I mentioned in the intro, another version of kind of buying the dip is reallocating your portfolio. So in general, your portfolio is going to have a mix of stocks, equities, which is like little tiny pieces of ownership in companies such as Apple, and then bonds, which are essentially loans you make to the government. You can sort of think them that way. And a lot of you might have read that the reason a lot of people think that we backed off on tariffs was because people essentially were dumping their bonds. Other countries were sort of, it's a little bit complicated, but essentially de-investing in America, you could say, which, has huge impacts on the value of the dollar, on the trustworthiness of the American economy, and on the 10-year bond market. How much essentially is, the country paying you back for kind of lending them that money through bonds. It's a very, juvenile way to put that, but that's more or less how you can think of it. So generally speaking, The younger you are, the more you're going to be invested in equities because they're typically more volatile, but they do have a lot more risk of, long-term returns. And so we, when our financial advisor called us, they said, you guys are a little underinvested in equities for your age bracket and your earning potential. Now's a good time, especially now, given how depressed the equity market is, push some of that money over, reallocate, and you might see a lot more benefits in the coming days. Now, of course, everyone who looked at their portfolio after things went green again, they were like, I'm rich. I made so much money in a day. No, you just got back the money you lost, basically. It's completely neutral. But if you did reallocate or if you entered more into the equities market, you did see a little bump there. It's also worth noting that when you are being really thoughtful about your investment strategy as you start to accumulate more money and you have it invested, and this is another thing that advisors are very good at helping with, is so my husband and I, when we look at our portfolio, a lot of our money is actually not invested in the US market. You have money invested in, Asian markets, European markets, all different markets around the world. And so actually, when we look at our portfolio each quarter, we can see that, like, for example, if the American market took a beating, which sometimes happens, sometimes, the indexes that we have in other parts of the world are way up and they actually neutralize each other. So it is also one thing that is good about having a portfolio that is well diversified, both in terms of the assets that you're investing in, but also where you're investing them, is really helpful because generally speaking, sometimes there's something like the 2008 crash, which was a global recession. But a lot of times these things are fairly localized, and what is bad for one market will be good for another. So yeah.
You took the words out of my mouth, because I did want to end with this notion of, we hear the drumbeat of diversification. It's so important. The easiest way to do that is index funds or mutual funds or exchange traded funds. Agreed. It's a way to buy a lot of different types of stocks and get a lot of exposure. And I don't want to get into all the mechanics of how those work. But you will also hear a lot, if you're on like the Fin Talk or following Finfluencers and all of that, people will say like, oh, just dump all of your money into total stock market index funds. Just dump all of your money into the S&P 500. You are not well diversified if you are doing either of those things, because all of your money is mixed up then with the American stock market. Diversification also includes global diversification and making sure that you're invested in other markets. And you can do that via index funds too. You can have exposure, through your Vanguards, your Charles Schwabs, your Fidelities. It'll have names like emerging markets, Asian total stock market, European total stock market. I'm not naming like actual names of funds, but things along that line. So yes, please make sure that your money is not just exclusively invested in one country's market or in one region's market. And the last thing too about understanding the dip and contextualizing, you made a really good point in the ad about advisor.com that, hey, our guy called us and said, like, don't look, which also sometimes can mean, like, don't look at the news. And the reason I say that, we hear the buzzword recession a lot. You're also hearing, like, worst dip in stock market history. Like, you're going to hear terms like that. And if it bleeds, it leads is true of headlines for media. It's important to understand how to contextualize this. The S&P 500 was over 6,000 points. And that's the highest it had ever been. So if it drops even 2,000 points, it's still higher than it was 5 years ago. So it's important to understand that, like, yeah, it still feels painful and you can log into your portfolio and it still hurts and doesn't look good. But biggest in stock market history, you have to contextualize out to, in the 80s, a 100-point swing was the largest swing that had ever happened. Like, that was unheard of. And now that can be like just a regular day in the market. So just understanding a little bit of stock market history can be really, really helpful to calm your nerves.
You asked, we answered. And we're going to do more of that next week. So come back. And until then, Erin, where should they go? What should they do?
Don't read all the news. No, I'm kidding. If you want to read the news, great. Just know how to contextualize it for yourself. Go to Planet Money and listen to some of those episodes about the tariffs to feel a little bit better and understand more. To find me, I'm on Instagram at Broke Millennial Blog. My website's brokemillennial.com, and all of my books are Broke Millennial something or other. And look at your local library.
She also has a really cute dog.
Yeah, that's true.
Bye.